Okay, today, February 27, 2013. Let's take a look at the market. The Dow Jones Industrial made another well, not all-time high, but a multi-year high, new 52-week high. And the things to watch for is the non-confirmation confirmation. And I have mentioned that in previous video and in previous posting in my blog. And the most recent one was the February 20th that I mentioned in my blog that I expect to see a new higher high on the Dow Jones Industrial, and that was after a day that we actually had a big drop. And I was mentioning that due to the recent confirmed high, the new 52-week high on the Dow Jones Industrial, that I do expect it to see at least one newer high, and then depend on how that high is being made, then we could make the assessment what is the probability of seeing a higher high from that. Well, today we actually see a new closing 52-week closing high on the Dow Jones Industrial. It closed at 14,075.40, and it's actually up like 175 point or so. But the most notable thing is to look at the other indexes, and right here on this chart here that I have on the screen, I have the Dow Jones Transportation. If you notice, this is the February 19. That was the last time that it hit a new 52-week high, or the all-time high for the Dow Jones Transportation, where in which that the Dow Jones Industrial has also hit a new 52-week high back then. And also the other indexes like the S&P 500 here, and also the Nasdaq 100. Well, the Nasdaq 100 did not really hit a new time, I mean a 52-week high or any kind of high or whatever. But I just put it here for comparison. It's the composite is actually, the Nasdaq composite is actually hit a 52-week high along with it, with the Russell 2000. The Nasdaq is been depressed by Apple. So, but I mainly watch the Nasdaq 100 because of the tech stock that I have an interest in watching. So if we could take a look at this, if I draw some, just show a line here that you could see today's new high, and here, on the transportation. Let me just show it a little bit below so we can see the color contrast here, and you can see that we failed to match the previous high, and similarly on the the S&P 500, and well, we won't even see this here, and here the composite, you can see that it's quite a distance away from the previous high, and also the Russell 2000. So with this non-confirmed high, definitely we could expect some sort of weakness on there. Even though today's the breadth, like the advanced decline, is pretty strong, and also the new high, new low is not too bad. So I do anticipate that the Dow going to consolidate up here, and possibly just pull back a bit, but it could sneak another newer high on there, and it might go and take out the all-time high. But the key thing is to watch is all these other indexes. Will they actually make up ground and come up? And next time when the Dow make that new high, that these indexes will confirm it. And if it doesn't, then it just gives you another reaffirm that the market basically is topped out. And like I said, in the past, the market top is not an event; it's a process. So it takes time for the market to form that top. Just because we have these big swing down day and that sort of thing doesn't mean it's a reversal. Then the market is topped out. Usually, the market top out in a very subdued manner, and in which that nobody pay attention to. It doesn't top out with the fanfare like today that all the talking head and news media probably will be talking about, a new multi-year closing high today and that sort of thing. And similarly, like a few weeks back when it closed above 14,000. Once again, we have all these talking about making all these fanfare about closing about 14,000 and that sort of thing. And the market doesn't top or doesn't bottom with all these fanfare and all these notice, because you have to understand the market is like a wholesale retail type of business, right? The smart money or the big money, they buy the stock when they at wholesale, and then they sell it at retail, right? And they would not, and when they try to get rid of the inventory, they could not let the price depress so quickly that they could not liquidate the inventory. So that's why you get these little pump and dump type of a day during the market top for them to distribute the inventory. They have to pump up the price and hold the price up while they distribute the inventory to the retail investor. And then when the price get the short seller or whoever depress the price, they pump it back up again, and they divvy up the inventory out again until they completely liquidate their inventory. Then they will dump the share and then press it down, and then go through that entire cycle of pushing the price down and have all the retail guys sell it and capitulate it at the bottom, and they pick it up again, and then the whole cycle repeat itself. So you got to remind ourselves that this business is about transferring money, right, from your pocket to somebody else's pocket and vice versa. As simple as that. Okay. Now anybody is looking at any other way, that they are just trying to make this game more complicated than it is. Okay. It is all about making money and transferring money from one individual, one pocket to another pocket. That's all it is. All right. So with that said, let's take a look at the indexee individually. And if we take a look at the Dow Jones here, you can see this is the previous high, right? And today we got this big white candle here that make this new high here. And if we look at these, let's take a look at the ETF, like the diamond. Okay, you can see, and then interesting to pay attention to is I got this 3-minute chart here. 3-minute candlestick chart here, and you can see that the Dow Jones Industrial kind of selling off a little bit, in the last 30 minutes or so, with the increasing volume here. You notice that the volume here is actually increasing here, right, with the price coming down. So there's some distribution taking place on the Dow, right? So you could see that if these people or these big money, they have confidence in the market continue to go up, they would not be dumping. They'd be carrying it overnight, right? So when you see these kind of price action in the last half an hour, last hour during the trading session, that kind of give you a clue of how are these big money is thinking for the coming days. Right? So if we take a look at the SPDR, and if we look at the SPDR, the S&P 500 ETF, look at this distribution here, right? Right here is about 3:30 Eastern time, somewhere around here. And you see this distribution, right? It's a massive distribution. It's taking out. Look at the volume, right? Okay, wow, that's the S&P 500, and then here's the Q, which is the Nasdaq 100. Look at this, right? It has taken, this entire duration to move from 67.20 up to 67.65, and it's only taking about half an hour to take that thing down. And look at the volume that is taking it down. Right? So kind of have to pay attention to these subtle things. That's why I say, the market cannot hide from us. It only try to create this deception and be deceitful to try to make it difficult for us to see what is it doing. But it is transparent in a lot of ways. It's just that you have to understand how to look at these things. Look at here, this Russell 2000. Once again, right? Look at the the sell-off here, right? And look at this, right? Here's the time span that it took to get this thing up, and here's that 30-minute time span to sell it down. So pay attention, people. This is the game. And yes, got to be very defensive in the next coming day. because you could see these little sell-off. They're gonna sell it off, pump it up, sell it off, pump it up, and then slowly grind it down until they get all the inventory turnover. Then they're gonna dump it and then start this snowball down the mountain, and then it's gonna just gather these momentum and get all these dip buyer that got trapped in there, these trapped long, and get them down until they capitulate, and that's when we're going to start the game all over again. So just pay attention.